Hi there, welcome to Kneppy Invest. A really interesting day on the overseas or the American markets. Nasdaq is actually or was actually up 7.5%. Now, it is quite rare to see the Nasdaq up that amount in one trading session, but it does happen. So, in fact, I did go past or back the last 20 years just to see the amount of days we have seen these sort of rises on the NDQ and or NDX, and it has been about 8 times in the past 20 years. The last time was in 6th of April 2020. Then we saw it the 13th of March 2020. We saw it in 2018, and then again in 2008, 2009, and between 2001 and 2003, we saw quite a few pretty good days. And all those dates coincide when the Nasdaq is in bear markets. So you only see these sort of days in bear markets, and of course we're in a bear market right now. So it doesn't mean that the drop in the Nasdaq and the drop in the equity markets has come to an end. So what I'm going to do in this video is I'm going to go back through time, look at the past 20 years, and to see if there's any patterns we can take away from when the Nasdaq has seen these rises. Doesn't mean it's the end of the bear market, or maybe the bear market has just begun. Is that when we typically see these sort of rises? So I'm just going to see if there is that sort of pattern over the past 20 years. The other thing I'll do in this video is I go through some of the other charts. So look at the Dow Jones, which does look interesting. The S&P 500, gold, copper, silver are all looking really interesting. Also have a look at the DAX, which is the German indice. US 10-year bond yields, so all bond yields took a nosedive in terms of yields, and prices went up because, of course, yields and prices are inversely correlated. Have a look at iron ore. That's probably the least interesting of the commodities. Also have a look at crypto. Now, this video today was not planned. I actually recorded another video in terms of what has been happening in the crypto space. So there has been a crypto crash. So just have a look at the cryptocurrencies. Have a look at Bitcoin and Ethereum just to see if they have rebounded, because they have crashed in the last few days. I might actually attached my video recorded last night to the end of this video, because I don't want that video to go to waste. Have a look at the XGO, because I am recording this video before trading has begun on the ASX. I do anticipate a really good day. So I would not be surprised to see the XGO up 2.5 to 3% today. I would be surprised if it's up any more than 3%, but it's not out of the question that it won't be up 3%. So just because the Nasdaq was up 7.5% doesn't mean we'll follow that. The Dow Jones was only up about 3 and a bit percent. And because our market is dominated by banks, and I don't think banks will rally that much on this news, and commodities, but I would expect commodities to rally. Maybe not the iron ore players like BHP, Rio Tinto, Fortescue, but I would expect a lot of the gold players to rally quite hard. A lot of the copper players, but there's not many copper players to rally quite hard as well. So I do expect a really good bounce in most sectors on the ASX today. So I'm going to call it right now. The XGO will be up 2.4% at the end of trading today. So this was the video I had planned to release today, crypto crash. So a lot of interesting things have been happening in the crypto space. I don't follow the cryptocurrency space all that closely, but what happened in the past 5 or so days has been interesting, and we saw a Bitcoin fall through a fairly strong support level. We saw one cryptocurrency, FTT, fall 70% in consecutive days. So I might attach this particular video at the end of this video, or I might just release that video on its own. Now, first thing I want to look at is the Nasdaq, and the whole reason I want to look at that, this is simply because it rose 7.5% in one day. And in my opinion, the majority of the highest quality companies in the world are on the Nasdaq. And I have taken a position in quite a few of those companies, taking advantage of significant decreases in their valuations. And when Alphabet, Apple, Microsoft all get to a PE less than 20, that is a great time to buy really high quality companies that have the potential to grow a lot in the next few decades, because a lot of those companies are doing really fascinating things right now. And I don't think the market is fully appreciating that. The other way to look at it is some of these really high quality American companies are valued less in terms of PE ratio than some of the tech companies on the ASX. So I'd much prefer to buy those American companies or based companies compared to, or rather than the Australian tech companies. Anyway, back to the Nasdaq. So 7.5% according to TradingView. Now, even though it did rise 7.5%, the Nasdaq is still in a really good downtrend. So I've got two lines here. This first dash line is, or was, an initial support level that has been broken. And then this dash line, sloping dash line, is the trend. And if I see that trend line broken, that would be a possible bullish move for the Nasdaq. But because the Nasdaq has gone down over the past 2 weeks, we have just gone back up to where the Nasdaq was about 2 weeks ago. In fact, back to when it was on the 1st of November. So that was 10 days ago. Even though we did have a really good day today, there has been overall weakness in the Nasdaq. So this is not a bullish sign. What happened overnight? We'll need to see further rises in the Nasdaq, and it wouldn't be surprised to see this hype. I won't say hype. This further this interest, this exuberance in the Nasdaq overnight. Wouldn't be surprised to see that really die off and wane away fairly quickly, particularly if we see any sort of negative feedback from companies in terms of how they're performing, any sort of profit downgrades or anything like that. That would put a lid on the Nasdaq rising any further from here, because we have had quite a few negative quarterly reports from companies over the past month and a bit. Now, 7.5% is a really big day. Now, if we go back through this bear market and we go to the 24th of February, that looks really good, that one-day candlestick, but that opened up really low and then we saw a significant bounce. So it was only up 3.4%. So what I'm looking for here is really big up days. And we haven't seen a really big up day during this particular bear market just yet. So what I've done is gone back through history just to see those sort of times where we have seen these sort of really big updates. And of course, during the COVID-19 financial panic, we saw a lot of volatility. We did see some really big updates. On the 13th, actually 7th or 6th of April, we saw it up, which day was that? Was this day? 7.4%. And at that point in time, that was a bullish signal because we had just seen it go past a previous high a few days previous to this, about a week previous. So this was a really good bullish sign for the Nasdaq and the overall market. So that was the 6th of April, up 7.4%. But in the actual bear market, which was a really quick, sharp bear market, I'm not even comfortable calling this a bear market. I thought the way I look at what happened during COVID-19 financial panic, it was more of a flash crash, not a bear market. But during this flash crash, we did see some really big up days followed by some really big down days. For instance, on the 13th of March, see if I can find the 13th of March here. So on the 13th of March, the Nasdaq rose 10.1%. But then the next day, it fell 12.2%. So a lot of volatility. And the previous day to the 13th, it actually fell by 4.4%, 9.3%. So a lot of volatility towards the 11th to about 14th of March. So that was at the time when there was a lot of uncertainty in the markets. No one knew what was going to happen with COVID-19 and how the governments were going to respond. So that was really understandable to see that amount of volatility during that period. The next time we saw a really big up day, and this is really understandable what happened, was the 26th of December, 2018. So let's have a look at that. Now, if you remember, now as we go further back in time, there were some instances where we did see fairly good up days, but not quite like what we saw today, where the Nasdaq did rally about 5%, say 2014 and 15, and I just don't remember those days, why it rallied. But I definitely remember why the Nasdaq rallied 6.2% on the 26th of December. So not quite as good as a rally we saw today. And the reason behind this rally was because of a pivot by the Fed. So during the latter period of 2018, the Fed was hinting that they were going to raise interest rates, and the market absolutely hated that. So the market doesn't want interest rates to rise, particularly those tech stocks that are not profitable, because that is the very worst thing for those Cathy Wood type companies. And when the Fed sort of pivoted away from that theme, that's when we saw the Nasdaq rise 6.2% on the 26th of December, and that was the end of this potential bear market. This was just a correction, and then the Nasdaq really rallied from then on. So this was sort of the bottom of this particular correction when we did see the Nasdaq rally only 6.2%. And then we have to go all the way back to 2008 and 2009 to see other days where we saw the Nasdaq rally 7.5%. So let's go all the way back there. So typically in bull markets, you don't see these sort of really good up days. And it's understandable. There's much less volatility in bull markets compared to bear markets. And the reason behind that is the difference between fear and greed. Fear is significantly more powerful than greed. And that's the simplest way to put it, simplest way to understand why there's a lot more volatility in bear markets. So let's go back to 2008, 2009. So where we are here, so we're only 2013 at this point. Here we go. Here is the GFC. Now, with the Nasdaq, there was a double bottom. The first part of the bottom was in November. Second part of the bottom was in March. And the Nasdaq did rally 6.6% on the 10th of March. So let's just zoom in where the 10th of March is. That was the 10th of March. So right the day after the second bottom, that's when we saw the Nasdaq rally 6.6%. 2 days later, the Nasdaq rallied another 3.4%. And then 3 days after that, the Nasdaq rallied another 4%. And then about 4 days later after that, the Nasdaq rallied another 6%. So we saw a significant rally in the Nasdaq in March of 2009. And this was the bottom, signify the bottom of this particular bear market, in my opinion. But we did see two really big down days in October, or two really big up days, in October 2008. And this was the height of the panic during the GFC. This is when we had all those shenanigans with the banks, with Lehman Brothers and all those sort of banks. There was that fear that there was going to be further bank failures. And we saw a lot of volatility, fairly similar to like what we saw during the COVID-19 financial panic. So here is October right here. I'll just zoom in a little bit more. And we saw a lot of volatility, a lot of up days, big down days. So there was one day here on the 13th of October where the Nasdaq went up 12.6%. But that was after a significant fall over the previous 2 weeks. There was one day the Nasdaq was down 10.5%. Another day it was down 5.8%. Another day where it was down 4%. So that was a simple little bit of a bounce. And then the day after the Nasdaq went up 12.6%, it was down 4.5%. And then the next day, it was down 8.8%. So a lot of volatility in the market at that point in time. And then a few weeks later, on the 28th of October, the Nasdaq went up 10.9%. And we saw that rally continue over the next 5 trading days, but then it continued to fall to the first bottom. So the way to look at this is that volatility was leading up to the first bottom in the Nasdaq. And then we saw a bounce, and then we saw the second bottom. And just after that second bottom, we saw the Nasdaq rally. So that was 2008 and 2009, where we saw the biggest up days towards the end of this particular bear market. Now, we didn't see any significant volatility, and I'm talking about really big down days and up days during the start of 2008, 2009. Now, there was some large intraday rises and falls, but nothing significant. For instance, this looks really big, but it was only down 3.4%. The next day, only 2.6%. This looks pretty good on the, what date's that? The 4th of January, but it was only down 4%. And I went through all these days, and that's sort of like what we saw in the first half of 2008. No really big up or really big down days. So let's go to 2000, the period between 2000 and 2003. And this is a period where we saw a lot of interesting days, and we saw some really interesting days at the start of the tech bubble burst, and saw some interesting days towards the end. But the majority of interesting days were in 2000 and the start of 2001. So let's have a look at that. And the majority of these interesting days were at the start of the tech bubble burst. And this is understandable as well, because the market was used to a lot of froth in the tech bubbles or the tech space. And when it started to go down, there would have been a lot of buy the dip sort of mentality. And that was definitely true, where we saw some really good big up days. And I think this was just buy the dip opportunities, thinking that the Nasdaq had fallen and now was the time to buy. And we saw that a lot. So you can see the top in the Nasdaq was the 27th of March 2000, and then in April and May, so only a month, 2 months after the top, we saw some really big up days after some really big down days. So on the 17th of April, the Nasdaq went up 10%, and then I think the next day after that it was up 5.2%, and then like a week later up 8%. 2 days after that up 5%, and then if we go to May, the Nasdaq ran up another 10%. Then 2 days after that 5.9%, and then the day after that 6.7%. So a lot of volatility in a few months after the top of the tech bubble. And then as it started to burst, a lot of volatility. So a little bit different to what we have seen so far in this bear market and what we saw in the GFC. But even if we go further into time, into 2002 and 2003, we did see some pretty big days. For instance, probably the biggest day I have seen was the 3rd of January 2001. And on this particular day, the Nasdaq went up 18.8%. Now, if I zoom in on that, it doesn't look that extraordinary, because the 2 previous days to this really large big rally, the Nasdaq was down 5% and then down a further 9%. So this rally in the Nasdaq just went up to the previous 2 highs, or not the previous 2 highs, but the high we saw 2 days beforehand. And then the 3 days after we saw this rally, the Nasdaq fell again. So between the days leading up to this big rally and the days following this big rally, we saw actually the Nasdaq down a fair bit. So it doesn't look that remarkable, but it was really interesting to see on this one day, the Nasdaq was up 18.8%. And then as the Nasdaq kept on falling, we saw actually less and less volatility. Now, the Nasdaq actually did reach a bottom all the way in 2000, what's that, 2002, October 2002. And if we zoom in, just after it reached the bottom, the day after it reached the bottom, which was, again, the 9th of October 2002, what happened the next day? The Nasdaq rallied 5.2%. The day after that rally, it went up another 4.8%. Day after that, it went up 1.1%. And the day after that, it went up 5.5%. So a pretty significant 4-day rally. And that signified the bottom in the tech bubble. It lasted about 3 years, but that was the signal that the bottom had been reached. And after that, the Nasdaq started to climb, and it kept on climbing. See that? You can see that? That was a bottom, and then it started to move into an uptrend. So this does not mean what we saw today or what we are seeing today signifies the bottom. It might, and I think what's going to be important is to see how the market reacts over the next few days. So that's all I got on the future or the past 20 years of the Nasdaq. We have seen these sort of days before. It does not mean this is the bottom. In fact, we have not rallied off the bottom. The bottom was on the 13th of October, where we saw the Nasdaq reach a bottom of, or low of, 10,440, and right now the Nasdaq is at 11,600. So let's have a look at some of the other indices, and the Dow Jones is actually a little bit more interesting. So just like the Nasdaq, I've put this trend line, and the Nasdaq or the Dow Jones has moved through this downtrend on pretty good strength. So the downtrend was tried to be broken 2 days ago. It failed. Then we saw a pretty big down day yesterday. In fact, the Dow Jones was down 2%. I think there was a little bit of fear that the CPI numbers were going to be worse than expected. And for those who don't know, the whole reason we saw a massive rally on the American markets was because better than expected inflation numbers. And then because of these better than expected inflation numbers, the Dow Jones had a nice little update of 3.7%. And it does look like there is potential that that downtrend has been broken. We need confirmation on this, but this could be a good sign moving forward that possibly the bottom has been reached for the Dow Jones. That's not necessarily true for the Nasdaq. That is not necessarily true for the S&P 500. Just like the Nasdaq, this index is still in a downtrend, but I still put the downtrend here, and there it is. So we need the S&P 500 to get above about 4,100. Right now, it's at 3,956. So a little bit more to go for the S&P to break this particular downtrend. And this could be just like rally. We have seen, like a bear market rally, like we have seen twice before during this particular bear market. You can see a couple of times where the bear market or the S&P 500 has rallied back in March, and then again in July and August. Two really nice rallies. So again, and we are still in a downtrend because we keep seeing lower lows and lower highs. So the most recent low was back in the 13th of October, which was lower than that low we saw in June. And the highs keep going lower. So we need to see this run of lower lows, lower highs to be broken before I am confident saying the bottom has been reached and we are moving possibly into a new uptrend. So that's the American indices. They look fairly interesting, particularly the Dow Jones. That is the most bullish by far out of the three. We'll take a look at all the company, or not all the company, but some of the really interesting companies. And we have seen some of the companies rally by over 20% overnight. So even though they've rallied over 20%, they're still in downtrends. Anyway, let's have a look at gold. So some of the commodities are looking really interesting right now. Gold is looking quite bullish. So I've got the top and the bottom. So gold is trading in this range. And right now, at around about 16,000 or 1,620 is a really good support level because we saw gold reach 1620 three times since the late September and rally off that. But we have seen gold rally in 3 of the last 6 trading days. And every single time it rallies, the next day we see a bit of a pause, and then it rallies again, and then a pause, and then another rally. So these happen 3 times in a row, and potentially today we'll see gold sort of remain neutral and go sideways, and that's exactly what we want. But the most important thing here with gold, I will not call this a break or breakout in the downtrend, but it has gone past the previous high we saw in October, the start of October. So gold has moved past that particular high. So this could be the start of a new uptrend potentially. We'll say a short to medium term uptrend in gold, but the most important thing is that support level at 1,620 has remained firmed and we have gone past the previous high. Now, I would like to see gold test, say that previous high was around about 1,720. I'd like to see gold test that and then bounce off it and then go back up to a new high. If we see that, I'll become very bullish with gold moving forward. So starting to look interesting for gold. Now we'll go past the cryptocurrencies. We'll go to copper. This is starting to look pretty bullish as well. We're also starting to see increasing volume in copper. We also had a symmetrical triangle. So I've just portrayed this symmetrical triangle by these 2 dashed lines. You can see this dashed line was just connecting the lows we did see. So we had been seeing higher lows, which is an interesting sign. But not only that, we had been seeing lower highs, which is this sloping line to downward sloping line. So that means these 2 sloping lines, the downtrend in the highs and the uptrend in the lows, were starting to converge. Now, symmetrical triangles tend to be neutral. They're not bullish nor bearish. What we want to wait and see is if there's a breakout to the upside or the breakout to the downside. And what has happened to copper, there was a breakout to the upside. So I'll just zoom in here. You can just see that breakout. So here is that downward part of the ascending triangle, this or the symmetrical triangle, and this is the upward part of the symmetrical triangle. So what we wanted to see was this downward sloping line to be broken, and we saw that on the 4th of November when copper went up 7.6% on pretty large volume. And that is exactly what you want to see. You want to see the very large volume accompanying the breakout. And not only that, we have not seen that breakout being tested. In fact, copper prices have kept on going up. So this is a really bullish move. Copper, would not be surprised to see copper move into an uptrend from here. It has gone past the previous highs we saw back in August. And the next level I want to see it get past is around about $4.56, which is the highs we saw back in June of this year. So much more bullish on copper. I do own a few copper stocks right now, and those share prices of those companies have rallied really hard. Ares Resources have gone up about 40% in about 3 or 4 trading days. Oil is not that interesting, so I'm not going to spend much time on oil. DAX. Did I go past DAX? No, DAX. This is the German index. This is starting to look bullish as well. So this was, in fact, I might draw a trend line here. So let's have a trend line. So we go here, here. You can see how the tops just coincide. You're beautiful. So from here, this top, we had this top here, tried to get this top here, and then the DAX broke out of this downtrend a few days ago. In fact, a few weeks ago on the 27th of October, and it is rallying pretty hard. And then the DAX overnight went past this previous high we saw back in August of this year. So it has gone to a newer high. So potentially the DAX is trying to move into an uptrend. So that's the DAX. Silver, did I show you silver? Silver is looking really bullish as well. So that has moved, gone past the previous highs, rallying really good on pretty good volume as well. So silver is looking pretty bullish. In fact, I'm probably thinking it's a little bit more bullish than gold, but they're both really bullish right now. Next thing I want to look at is US 10-year bonds. And of course, this has dropped off a rock, off a ledge, down 6.8%. So the yield down 6.8% yesterday. So it went up 4%, had been up above 4% for a few weeks now. It has fallen because of inflation. So the thinking in the market is the Fed won't be raising interest rates as much as they feared. And that's why the bond yields of the US government bonds 10 years have fallen. We saw similar falls in the 30-year, the 5-year, also the Australian. Look at the Australian. That's actually looking quite bearish right now, or possibly bearish. It has reached the previous low we saw back in September. Let's put it in a low line, bit of a low there. There it is. So it has gone right to that low we saw back in September. Iron ore has bounced off the lows we saw. Remember, there was that really big down day in iron ore, but we have seen a nice bounce. But definitely, by far, compared to gold, copper, and silver, this is by far the most bearish. And that's why I don't think we're going to see a significant rally in some of the big mining companies on the Australian exchanges. But there might be a little bit of excitement on all companies right now in the ASX. So I wouldn't be surprised to see BHP, Fortescue, Rio Tinto rally, but it should not rally because of increases in the iron ore prices. In fact, yesterday, when every other commodity rose by heaps, iron ore prices barely moved at all. So that's all the indices and commodities I wanted to show you. Actually, XJO, let's have a look at the XJO, because we did drop 0.5% today. And just like some of the other indices, there is a bit of a downtrend, and that downtrend was broken, but not quite as solid of a downtrend because it really only was reached once. But it does look like there is a potential double bottom. We have bounced off that double bottom back in October, and we have gone past, or getting very close to the previous high we saw back in September. It does look like the XJO wants to was having trouble getting past that previous high. You can see it was trying to get above it on 3 days over the past 6 or 7, but it will get past that on strength today. And it wouldn't be surprised to see the XJO get above the previous high, the high we saw in August, which is around about 7,100. So can the XJO go increase by 180 today? I think it can. I think it definitely can get past that August highs. And if it does get past those August highs, and we don't see any big down days in the next week or so, I think the XJO is starting to look a little bit more bullish because of what's been happening in the past few days and what will happen today. So instead of showing you cryptocurrencies, we'll have a look at Ethereum and what's the other one? Bitcoin. Either I'll append that bit of the video to my other video, the crypto crash video, or I'll attach that video to the end of this video. More than likely, I'll do 2 videos. I just haven't decided just yet. So let's have a look at how some US companies or US-based traded companies have performed overnight. So this could be a sign that we have reached a bottom. I don't think it's a definite sign, but some of these companies have rallied by over 20%. Now, some of the reasons why these companies have rallied by over 20% is because over the past week or so, some of these companies' valuation and share price have dropped by a significant amount because they have released some negative news. So even though we have seen some good news on the inflation front, doesn't mean that's going to flow through to good news being released by companies. I think there is potential for further downside because economic activity will drop away and some of the profits, some of the cash flows of these companies will drop away as well. So I think that's a definite future I can envisage over the next, say, 6 months or so. So let's have a look at some of these individual companies. I won't go through them all, but PayPal up 10%, Atlassian up 15%. However, in saying that, a few days ago, it was down. Which day was that? That was the 4th of November. It was down 29% because of a bad report. So even though it rallied by 15% today, it was still in a well-defined downtrend and it went past a really good support level as well. So not a bullish sign for Atlassian. Shopify up 18%. Now, Shopify is looking interesting because it looks like it's going sideways. Try and consolidate. This is one of the companies I am looking at possibly taking a position in the future. Amazon up 12%, but this is in a downtrend. And it did release, just like Atlassian, released a negative report a week or 2 weeks ago. And that's why the share price has dropped to below $100. In fact, the COVID-19 low for Amazon was around about $83. So it's just above COVID-19 lows, which absolutely fascinates me that the market is pricing Amazon right now similar to what I was pricing it during the COVID-19 financial panic. And that's absolutely amazing. I think there's a lot of upside to Amazon. Netflix up 7.8% or 8%. This is starting to look a little bit more interesting. It does look like the sentiment in this company is turning around. Alphabet up 7.8%. It absolutely confounds me right now how Alphabet has a price to earnings ratio of 17.6. I think there's a lot of value in this company right now. And the only reason the share price and the value of this company is dropping is because of suppressed spending in advertising. And of course, whenever there's suppressed spending in advertising, that's going to turn around eventually. So this drop in the valuation of Alphabet is just because of suppressed advertising spending, which is not structural. It's not a long-term issue for Alphabet. This will turn around. And as soon as it turns around, this company's share price will absolutely take off. Not only that, I think this company has significant growth ahead of it because of all the things they're doing apart from the advertising. So even though the majority of revenue is created because of advertising, I think this company has a massive amount of potential. NVIDIA up 14%. Snowflake up 15%. I was going to say Facebook. Meta up 10.2%. So a lot of these companies, share price up double digits. Some of these companies' share price up over 20%. Disney had a bad report, share price up only 4%. But that share price of Disney, that dash line, I'm pretty sure is the COVID. Yeah. So Disney right now is at COVID-19 lows or just above COVID-19 lows. That's absolutely absurd. And even non-tech companies went off its rockers overnight. Home Depot up 8.8%. Lowe's up 9.5%. Dick Sporting Goods up 8.7%. Affirm up 23.9%. I think they have a negative report the previous day, as Affirm was down 22%. The previous day, now up 23.9%. Cloudflare up 24.9%. Unity up 29%. I think this was the best performing stock of the day, but it had been down quite a bit over the last 6 trading days. I'm a pretty big fan of Unity. It's not a profitable company, but I think it has the potential to become highly profitable in the future. Revenue for Unity has grown from 380 million to 1.1 billion in 3 years. And I think it's not profitable, as I mentioned before, loss-making to the tune of 530 million, but it has the potential to be significantly cash flow generating over the next 5 to 10 years. But I think there is that potential that it won't make profits for another 3 to 5 years. And that's why the share price of this company has absolutely taken a hit, just like many other tech companies. ARK Innovation Funds down or up 14.5% the day after it hit multi-year lows. So some good news for Kathy Wood and her investors. and they probably would be getting pretty nervous that it did hit, or not all-time lows, but multi-year lows. Just going through this, so many companies up. Was there any companies down in my list here? So let's have a look at the first company that was down. Even AMC, the movie theater company, up 18.1%. Hilton up 5.2%. Marriott up 5.6%. So Expedia up 11.2%. So every single company had a really good day. Oh, here we are. Stoneco down 0.1%. But look at the chart, just going sideways forever. I don't know much about this company. They're a tech company. Revenue has increased from 103 million to 500 million in 4 years. Really good revenue growth of that company. Don't know why it was only up, actually down. Don't know why it was down 0.1%. Why there was no hype in that company today when every other. Oh, McDonald's down 0.7%. But this was a day after it reached all-time highs. In fact, on this day, it did reach an all-time high, and then for some reason, people started to sell. So at one point today, it went to a high of $281, but closed at $275. So it was up for the majority of the day, but it has reached an all-time high. I can't believe McDonald's is an all-time high. So no one's stopped spending their money on fast food, it seems like. Well, McDonald's anyway. So going through this, Spotify up 10%. Trying to see if there's any really big up days. Peloton up 16%. Even Visa up 6%. MasterCard up 6.8%. I think I've gone past Berkshire Hathaway. Nike up 8%. Goldman Sachs up 4.5%. That has actually gone on a bit of a rally recently. Come on. Yeah, look at that rally in Goldman Sachs. Don't know why that's rallied. Let's have a look. Any more interesting companies here? Alibaba up 7.6%. That's in a well-defined downtrend. Don't know when that's going to break, but I would not be buying Chinese companies at this point in time, even if they look really, really cheap. CS. What's CS? Oh, Credit Suisse. I don't care about that company. And Duolingo. This is the latest company I put into my watch list. I do use Duolingo every single day, and I did not realize it was a publicly traded company. Duolingo up 10%, but chart does not look that interesting. So let's have a look. Markets, I've been speaking for a long time. Market's going to be opening soon. So let's have a look at cryptocurrency. So it's in the market section. If you do have any questions, any thoughts, I'd love to hear it. So leave it in the comment section of this video. Hope your portfolio is up 2 to 3% today. If it's not, you're probably one of the unfortunate ones, because I do see, I will expect the XAO to rally quite a bit today, unless we see the American futures start to go down a lot. So I have no idea what's going to happen on the American markets overnight. Will this rally be sustained? Will we see further rises, or will we see some selling? Will this lead to an opportunity? Will this be an opportunity for some of the bears to sell out their positions? And this is what they would be looking for. So I think the next few days on the American markets is going to be very important. And I don't know what the American futures are doing right now. Wouldn't be surprised to see. Can we see it? Sometimes they will, in TradingView, if you click on, yeah, they do have sort of a post-market activity in some of the companies, but they don't have it right now. So I'm not sure. Oh, there it is. So Amazon post-market up 0.2%. Netflix 0.3%. So based off this, we should see a pretty good day on the ASX, because right now the American futures are up. Tesla up 0.3%. Meta up 0.1%. Not really high. Apple up 0.3% in post-market trading. So it is looking bullish right now. Doesn't mean it's going to remain bullish. Oh, and the last thing I should say is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.